So welcome everybody. I'm so glad you're here today. We are going to be talking with Taz Rajan from Bromwich and Smith, just a little bit about debt consolidation and what that might look like. So just so everybody knows, we are in partnership today, and I'm Jody from Momentum. With Momentum, we work with people living on a low income. We partner with many different people in our community to ensure a thriving local economy, and we're really quite excited to be part of that here today. But before I start, I did want to say that in spirit of reconciliation, we acknowledge that we live, work, and play on the traditional territories of the Blackfoot Confederacy, being the Siksika, Kainai, Piikani nations, as well as the Tsuut'ina, the Stoney Nakoda, and Métis Nation Region 3. We also want to just welcome everybody here today that live and make their home during or in the Treaty 7 region of Southern Alberta. And we're so glad to get started with this. While all of our in-person programs are on hold, we do have a few community helplines. The first one I want to tell you about is our money management helpline. So on this helpline, you can call between 9 and 5, Monday to Friday, and receive some coaching or some assistance with any money management tools or any government and community resource navigation, or, like I said, financial coaching that you might need. The phone number is at the bottom, as well as the email address, moneymanagement@momentum.org. We also have the business helpline and coach line. For this line, you can get some assistance if you have a small business or you need any assistance learning about some recommendations or any of the resources that the government has put out there. We also have professional coaches that can assist you with your small business. The phone number is there, as well as the email if you need any assistance. And then lastly, our last coaching helpline is the employment helpline. So on this one, you can get assistance with resume and cover letter writing, any interview preparation, one-on-one job coaching, as well as some financial or community resource navigation. The phone number is there, as well as the email if you need assistance. Again, if you missed any of the phone numbers or any of the emails, please feel free to visit momentum.org and you can get some assistance there. All of them are listed and you're able to click right through. So just a quick little bit of housekeeping before we start. We're usually about 20 minutes. Sometimes we go a little over depending on the question and answer period. After the presentation, we do have question and answers. We ask though, please don't use the chat, because once you use the chat, it gets lost in the chat and we sometimes lose the questions. So please use the question and answer feature, which will be monitored and then answered at the end, right, Taz?
Yeah, that would be great.
Perfect.
Thank you.
Yeah, Taz will answer the questions at the end. Everybody is muted. Like I said, please use the question and answer feature, and this is being recorded. So if you miss any of it, it will be on the Momentum website and the YouTube channel for Momentum as well. So
Sorry about that.
That's okay. I'm going to go ahead and pass it over to you, Taz. Thank you so much for partnering with us, and I can't wait to hear your presentation.
Thank you so much, Jody. That was a great introduction. So thank you, everyone, for being here today. And I'm so excited to partner with Momentum, such a great organization. We've had a long-standing partnership with Momentum, and it's an honor to be here. So let's talk a little bit about debt and you. And I kind of wanted to start with, why are we even talking about debt? I know I've struggled with debt. And, in that moment when you're feeling overwhelmed by your debt, it's very easy to feel isolated, to feel like you're the only one. There's shame, there's guilt. And so, I wanted to share with you that, any given time when we are looking at Canadian statistics, roughly half of Canadians will report things like they're feeling overwhelmed by their debt, or they're afraid that they're not going to be able to cover their payments over the next 12 months without borrowing more money, or that they're worried about their ability to pay back their bills, or how they would survive if they were to miss a paycheck. So, some stats are here that you can see, but, the point I want to make is you're not alone. At any given time, about half of all Canadians are struggling in some way, shape, or form with debt. And it really usually has nothing to do with being good or bad with money. We're clearly seeing right now during the COVID pandemic, more than ever, that a lot of times there are these external factors that really cause us to be in that situation where we're feeling crushed by our debts. And so today we're going to talk about just two options that are available to people that are feeling that way, and what the pros and cons are, and how do you decide which of those two options are really going to be the best for you. You know, it's a timely conversation to have, especially with the pandemic. But I guess the other thing I want to say is, you know, there's a lot of talk during the pandemic of being okay to not be okay. And I just want to say, even post-pandemic, you know, if you're struggling with debt, it's okay to not be okay, but it's really important to know what your options are and who do you reach out to and how do you get some help with that. So the two key solutions that we're going to be looking at, because I know you guys have, you know, done some other webinars on this topic as well. Today, we're really going to look at the difference between debt consolidation and debt forgiveness. And again, what are the pros and cons, and how do you decide which one is going to be best for you? So first of all, what is debt consolidation? A consolidation loan is either a loan or a line of credit, and it takes other loans, credit cards, and debts and rolls it all into one payment. So essentially, it's kind of like borrowing money to pay back borrowed money, really. With a consolidation loan, you have a set interest rate, one payment rather than multiple different payments, with various interest rates. So it's one payment, one interest rate. In most cases, you can keep your old credit cards or your old debts, but in some cases, you will be required to close out other credit products and reduce any other debt. Really depends on the situation and type of consolidation loan. Not all consolidation loans, of course, are created equal. Not all of them will offer you a lower or better interest rate than what you're already paying. There are high interest rate lenders that specifically target people that have that bruised credit, because again, when we're struggling with money, when we're struggling with our debt, you know, we tend to feel very isolated, that there's that shame and that guilt. And so we're not necessarily wanting to talk to our friends and family about it, or go in and talk to like our financial planner or our banker or any other type of professional. So quite often people are turning to options that are available online. And those options, some, not all of them, can actually be, you know, a higher interest rate. So it's really important to, you know, be aware of what you're looking at. And yeah, I guess, you know, when you're feeling like you have bruised credit, sometimes you feel like that online option with that really high interest rate is your only option, and that's not necessarily always true. So again, with a debt consolidation, you're paying off the full amount of all the debt that you have. You're just putting it all into one payment. In order to qualify, the lender will check your credit report. They'll want to know things like your income, your expenses, your assets, your liabilities. And that's just to mitigate or look at what the risk is of lending money to you to pay off other money that's been lent to you in the past. Once you're approved, you are bound by your contract with that lender to make your payments, including the interest. And hopefully you have looked at a plan to pay that consolidation loan or line of credit off in full over a certain period of time. Again, you're not required with a debt consolidation. You're not required to, change your money mindset or work on your behaviors or change your money habits or any of that. Really, that responsibility is on you to avoid getting into further debt and to, choose whether you work on your money mindset or your habits or any of that kind of thing. In a debt consolidation situation, most of your debts can be included in that consolidation. So whether it's a major bank or a different financial institution, you can consolidate most of your credit card balances, lines of credit. Student loans can sometimes be a little bit tricky, but most lenders will also consolidate those for you. So what's the impact on your credit report? I know that's a big question that comes up with people. A consolidation loan will be visible on your credit report, and making your monthly payments on time is really quite crucial. Your score may drop initially because you've taken all these other credit products and put them into one, let's say, loan or line of credit. You're all of a sudden going to have this one loan or line of credit that's got a high balance on it. But as you pay that down, your credit score will start to improve. So in terms of how big of an impact does that have on your credit score, Somebody checking your credit report has about a 10% impact on your overall credit score. Having a high balance to your limit, that tends to have a much bigger impact on your credit score. But again, this is going to be hopefully short term. Hopefully you've got a plan in place to pay that consolidation loan off in a shorter period of time than it would have taken you to pay off these individual debts separately. So what are the pros and then what are the cons of debt consolidation? Let's have a look at the pros first, okay? It is really good for someone that's very disciplined and is not going to go back and rack up, their old credit cards again or rack up some new credit cards. It could really be a good option for someone in their overall financial plan that they've worked through with a financial expert. It's a good one-time option for taking advantage of a really low interest rate and accelerating your payments and kind of, getting yourself out of debt maybe a little bit quicker. It has a short-term impact on your credit report, and it does have the potential to lower your interest rate and assist you in managing one payment rather than multiple payments. So of course, we're going to have to look at what are the cons. It's really not great for individuals that lack that discipline to not go and, rack up new credit or rack up their old credit. And again, in my early 20s, I did exactly that. I got a consolidation loan, and while I was my consolidation loan, went and racked up all this new credit. So in the end, I really wasn't any further ahead. It is short-term relief from overwhelming and unmanageable debt rather than a permanent solution. And it's not ideal for someone who's struggling to keep up even with that new consolidated payment. So, you might have put all of your credit into one payment, but that one payment might still be challenging for you. So then that's really not an ideal situation. And the big caveat I have is really watch for things like upfront fees, high interest rates. Do your due diligence and check out who the company is that you're looking to do this consolidation loan with. What does the Better Business Bureau have to say? What are the reviews that are out there? What else can you find out? Are they licensed? Are they a professional? Really do that due diligence before you get into a commitment with someone for a consolidation loan. So let's have a look at debt forgiveness then, and what's the difference between debt forgiveness and debt consolidation. In a debt forgiveness situation, basically your lenders are forgiving the debt or a portion of the debt that you owe them. And there are two debt forgiveness programs in Canada. They are consumer proposals and bankruptcies. And both of these programs are only available through federally regulated licensed insolvency trustees and licensed insolvency trustee firms. So in a debt forgiveness program, you only pay back a portion of your debt. Usually you're not paying back 100% of your debt, and there's zero interest. It's one monthly payment based on your budget as well as federal guidelines. It's not a loan. It's not a form of borrowing money to pay off other money. It's not a credit, like a credit vehicle of any sort, unlike debt consolidation. In order to qualify for one of the debt forgiveness programs, again, the licensed insolvency trustee is going to want to know things like, what is your income? What are your expenses? What are your assets? What are your liabilities? Who are the dependents in your family? All of that stuff. Student loans and Canada Revenue Agency and all unsecured debts can be included. Now, I've put a little asterisk beside the student loan, and that's because there's a little bit of a criteria for student loan to be considered for debt forgiveness. And basically, in short, as long as you haven't been a student in the last 7 years, your student loan can be, put into a debt forgiveness program. But again, this is something you want to have a conversation with a licensed insolvency trustee firm. So as part of the regulation, you will be required to attend 2 mandatory counseling sessions to help with money mindset and behavior. You'll be required to change some of your money habits and build some new ones so that you can avoid becoming overwhelmed by debt in the future. It's really meant to be very rehabilitative. Your old credit cards and loans and other secured debts will also be closed out. Impact on your credit report. Again, a consumer proposal shows up as an R7 on your credit report. The proposal itself will be anywhere from 2 to 5 years long, and then it's going to remain on your credit report for 3 years after you've completed that program. A bankruptcy shows up as an R9. That's the worst rating that you can have on your credit report. And a first-time bankruptcy where your income does not exceed, it's called surplus income. So there's certain guidelines that the Office of the Superintendent of Bankruptcy has for, how much income they feel that Canadians need to survive. And so, as long as you don't have any what's called surplus income in that situation, usually a first-time bankruptcy is 9 months long, and then that rating, the R9, the bankruptcy, remains on your credit report for 6 years from the date of discharge. So I want to share this chart is so good. It's from the book The Credit Game by Richard Moxley. He is a good old Calgary author, actually. Used to be a mortgage broker, and then he really decided to really delve deep into credit reporting and how that all works, your credit score and your credit report. And so you can see from this chart, something as simple as late payments, that stays on your credit report for 6 years from the fact that your payments have been late. Credit counseling. Now, this is one of the things that we didn't really talk about today, but credit counseling, the program itself is usually 5 years long, and then it remains on your credit report for 2 years after that program is completed. Like I said, consumer proposal, it's usually a 2 to 5 year program, and then it's going to stay on your credit report for 3 years after you complete it. Sometimes people are like, well, I'm not going to do anything, even though, it's in collections, but that's not going to damage my credit report as bad as maybe a consolidation loan or a consumer proposal. And the truth is, you look at all these different provinces, but in general, collections, lawsuits, foreclosures are kind of staying on your credit report from anywhere from 6 to up to 10 years in PEI. But generally, you're looking at about 6 years for those to remain on your credit report. Bankruptcy stays on for 6 years from the date of the discharge. So if we look at this chart, you can kind of get an idea that it's kind of 6 of one, half a dozen of the other. They're all kind of going to remain on your credit report for 7 years. So it's really a question of which of these options is really going to be the best option for you to deal with and eliminate your debt. So debt forgiveness, what are the pros? Okay. You only have to pay back a portion of what you owe rather than the full amount of what you're owing to your creditors, which is a really good thing when you're feeling really that crushing burden of debt. Sometimes a consolidation loan, like we had said, even just putting it all into one payment, that one payment can sometimes be way more than what we can actually handle in our real life. It can free up some cash flow for you each month. There is 0 interest and one payment rather than multiple payments. The really cool thing is it's legally binding on your creditors. There's a creditor protection. It's called the stay of proceedings, which legally your creditors can no longer call you, send you letters of demand, or apply to the court for like a judgment or garnish your wages or any of those things. And this is something very unique, only available to you in these programs where you have that legally binding protection from your creditors. It'll immediately give you relief from those creditor calls. And it's really great for individuals that are looking to get out of that credit loop of borrowing to pay off borrowed money. A bit of a more permanent solution. What are the cons? Well, it has an impact on your credit report. R7 or R9, those are some of the worst ratings that you can have on your credit report. It may make it difficult to qualify for additional credit with best rates and terms in that short term. Definitely we have seen people be able to qualify for best rates and terms 2 years after discharge, being able to reestablish some good credit. But initially in that short term, it can definitely be difficult to get the best rates and terms. And it's not good for someone who's already fairly comfortable paying their debts off as they become due. And just like I'd said with debt consolidation, with debt forgiveness as well, you really want to be looking out to see, are there any upfront fees? Is it a really high interest rate? You want to choose a reputable company. Again, check your Better Business Bureau. Read those reviews. Do they sound like bots or do they sound like real people, right? Do your due diligence. Talk to some of your financial experts and licensed professionals before you decide who you want to work with for your debt forgiveness option. So what's best for you? really the biggest question is, am I managing my debt payments as they become due? If not, then you need to look at both options, be really real about your strengths and your weaknesses, and choose the solution that has the best chance of being sustainable for you. And if you'd like to discuss those options, you're more than welcome to contact Bromwich and Smith. We're licensed insolvency trustees. There is no obligation. It is completely a private, personalized, free consultation. And if debt forgiveness is not the right option for you, we're going to let you know that. We're going to recommend some other options for you. So that's really, we're at like 3 minutes, so I'm not going to get into too much detail about who Bromwich and Smith is. I will just, quickly share with you that these are our values, and we live these values in everything that we do. We really do treat people with grace and respect. It's absolutely no judgment. We do provide impartial and unbiased information. The really cool thing, especially with COVID now, we're able to help our clients through phone and through video conferencing. So, the initial consultation is over the phone, but your signing is done through video conferencing. And then also your 2 counseling sessions are done through video counseling. So it's all from the safety of your home. So what do you need to do next? Find out who and how much money you owe. Prepare a budget to figure out your ability to pay, and then really look at what your options are and pick the option that's really going to set you up for the best success. A little bit of bragging on Bromwich and Smith, haha. And that's really it. We can open it up to questions now. Whew, 2 minutes to spare. How's that?
Holy Dinah, Taz, that was amazing. That's fantastic information. Thank you. Yeah, so let's go ahead and just give some space for anybody that might have a question.
I don't see any in the box either, not yet.
No, me either. I feel like you were so thorough.
Oh, well, good. I hope that's what it is. I hope nobody's feeling like, oh, I have a question, but I don't want to ask. This is a safe space. So absolutely, we welcome those questions for sure.
Well, why do some banks refuse to do consolidation for outside debt?
Great question. So sometimes it really depends on which institution you are talking to and which debt they are. So sometimes what happens is the debt that you want to look to consolidate, maybe it's got priority. So even if they were to pay it out, that lender would still have priority. So let's say you have a first mortgage on your home, and that's one of the things you would like to look to consolidate. That, like, if your mortgage is with a particular lender and there's also mortgage insurance on it, they kind of are going to have a say on that property, even if it's been consolidated. So it's sometimes just that, or if they're not familiar with the type of lender or the type of debt that you have, sometimes it's just their guidelines. They're just not comfortable with, a certain lender or consolidating certain types of loans.
Great, thank you. I also seen in the chat there's a question.
Yes. Yeah, I was just going to say that. So the copy of the slideshow, I believe Momentum will be sending that out, or I can certainly share that, no problem.
And also it will be on our YouTube channel. They'll be able to access it there.
Perfect. There you go. And how to initiate any of these programs? That's a really great question. So in terms of debt consolidation, how you initiate that program, I'm going to say it's usually best to talk to your main bank or financial institution. The major banks and, credit unions and treasury banks, like those are all reputable companies. So, if you already have a checking account, let's say it's Scotiabank, that's where I would start, especially if you already have credit with that lender and then you're looking to consolidate it. I would definitely go to the banking institution that you're already dealing with. A couple other sources would be, if you own a home, you could talk to your mortgage broker about maybe refinancing your mortgage to take on some, to wrap up all of that credit. Again, you really want to look at fees and interest rates and how long is it going to take you to pay it off. You really want to make sure you're setting yourself up to be getting ahead of the situation rather than setting yourself any further back. And then some financial planners offer different types of consolidation loans as well. So like an investors group or an Edward Jones, or, if you're dealing with, again, a reputable financial planner, there are lots of things online. What I want to warn you against, where you want to stay away from, are like those payday loans, or something like a Refresh Financial, or some of those kinds of places, because those do tend to charge really high fees, really high interest rates. And the whole goal of looking at a debt consolidation is to help you get out of debt sooner than you would if you just kept everything, individual, with all their different interest rates and all their different payments. So I caution you, if you're looking at that debt consolidation, then look for something, you want to know, how long is it going to take me to pay this off? What is this interest rate on this consolidation loan versus these other items that I'm looking to consolidate? You really want to make sure you're getting ahead. As far as the debt forgiveness side of things, you want to contact a licensed insolvency trustee. So, wherever you are, either through Google or through the Office of the Superintendent of Bankruptcy. Also, even on the CRA website, they have, if you're struggling to pay your CRA debt, how do you get help? But you want to be making sure that you're speaking to a licensed insolvency trustee or a licensed insolvency trustee firm, and not just a debt management company, because the only one that that actually can set up a consumer proposal is a licensed insolvency trustee. There are other firms that, eventually will get you to that point and say, yeah, okay, the best option is consumer proposal. They don't do it. They take it over to a licensed insolvency trustee, and quite often they are charging you that upfront fee for the work that they've done to help you get to a trustee, whereas you could go directly to a licensed insolvency trustee, and we don't charge upfront fees.
That's great. There's a couple of more questions if you have a few more minutes.
Of course.
Perfect. So someone asks, what time of year is it best to apply, or do the interest rates change seasonally? Does it really matter?
That is such an interesting question, actually. So I wouldn't say it's really the best time of year or seasonal, but you probably hear, I don't know if you guys watch or listen to the news, but every so often you'll hear in the news, the Bank of Canada did so-and-so to the overnight lending rate. That overnight lending rate, normally it affects mortgage rates the most, but that can have an impact on the interest rate of other lending products as well. So you kind of want to have an idea of where are generally interest rates at. More so than time of year, that's best to apply. I would really say it's best to apply before things get out of hand. It's best to figure out a solution before things go to collections, before you've really missed maybe 3 or 4 payments. Try and catch it before that. You're going to have an easier time qualifying. You're going to get better interest rates. You're just going to have a more comfortable conversation with someone if you haven't already gotten to the point where it's in collections or there's a judgment than you would if that was the case. And then we have another one here that says, I heard that banks look at consumer proposals the same as bankruptcy. Why would you file a consumer proposal over bankruptcy? Great question, for sure. So, like I said, in your credit report, consumer proposal shows up as R7, bankruptcy shows up as R9. They're both under the Office of the Superintendent of Bankruptcy. So quite often, initially, everything's going to show up as bankruptcy, and you just need to have that fixed on your credit report once you're discharged. The big advantage of a consumer proposal versus a bankruptcy, though, you get to keep all of your assets in a consumer proposal as long as you can afford to continue to keep them, okay? Whereas in a bankruptcy, we do need to look at those assets. There are some exemptions, but that could factor into what your payments would be. It could factor into having to liquidate those assets. So one of the big advantages of consumer proposal is you do get to keep all of your assets. And just on a side note, anything registered, like your RRSPs, RESPs, LIRAs, RIFs, those kinds of things are all exempt in both situations, consumer proposal and bankruptcy. So don't go cashing those out to pay off your debt, because you really don't have to. The other advantage of a consumer proposal is you can actually qualify for credit during your consumer proposal, whereas qualifying for credit during a bankruptcy, pretty much not really an option for you. You'd have to wait until the bankruptcy has been discharged. The other thing is the bankruptcy remains on your credit report for 6 years from discharge. Consumer proposal stays on for 3 years after discharge. So there's a couple of big advantages to consumer proposal, that you get to keep all of your assets as long as you can continue to, cover the cost of those. It's not as bad of a rating on your credit report. You're right. Sometimes the major banks will see it very similar. It doesn't stay on your credit report quite as long. And generally speaking, when you're talking to a licensed insolvency trustee, they're going to have a look at your whole entire picture and go, okay, if you were to go bankrupt, this is what it would look like. And what we want to do is just offer your creditors something better than what they would have gotten in the bankruptcy situation. So a lot of times people feel better doing a consumer proposal themselves than a bankruptcy, because they feel that they've done their best to pay back that debt as well. So bankruptcy is always the last resort. Even when you're talking to a bankruptcy trustee or licensed insolvency trustee, it's always the very last resort that we will go to. You need to actually be bankrupt in order to file into a bankruptcy. So I hope that answered your question.
That's amazing. Thank you. Taz, did you end the slideshow? Because there was just a couple of more slides at the end I was hoping to share.
Oh, let me see. Hold on. Un momento, por favor.
Of course. If not, that's totally okay.
I can get you back. All okay. Good. I can get you back. Let me go back to share. There we go.
Perfect. So just the very last few slides, if you will. Perfect. So yeah, Momentum does have a couple of great programs. The Money Talks, of course, which you're attending today. Next week is online shopping. Is free shipping worth it? I don't know about you, but there's been a million times I've looked at my Amazon cart and it's been spend $10 more and get free shopping or shipping, sorry. And so what do? I spend $10 more, right? So next week, we're going to talk a little bit about, is that free shipping worth it, right? Is it something that we should really be engaging in? Please feel free to register there if you have not already, or pass that on to anybody else who might like to. And then we do have another program that I just wanted to talk a little bit about. It's the next slide, I think, or back to. Sorry, Taz. Yeah, so how to buy your home. This is a fantastic program, and we have a couple of keynote speakers, Kelly McDonald, who's a realtor from the real estate company, as well as Carrie Miller. She's a mortgage specialist from RBC. So there is one on June 25th and one on July 9th. Both the tiny URLs are there. They're Thursdays at 5 p.m. and you can go ahead and attend those webinars and just really get some information on what it looks like to buy a home now in the Calgary market. So again, we've got 3 helplines. If you need any assistance, please feel free to give any of them a call, or even just go to momentum.org. And other than that, I want to say thank you, Taz, so much. I hope you have a great rest of the day, everybody. And this webinar will be posted online.
Thank you so much.
Thanks.